Hello, welcome to this video on the schedule of non-current assets for limited companies. The directors of JH plc provide the following statement of financial position extracts at the 30th of June 2023, from the 30th of June 2023. So we've got cost column, depreciation column, and carrying amount. Now, carrying amount is also referred to as net book value. So non-current assets, which is property, plant, equipment, we've got land and buildings. The cost was £200,000. The accumulated depreciation, the depreciation to date, is £55,000, and the carrying amount is the cost, take away depreciation, to give us £145,000. Next, plant and machinery. The cost is £75,000. The accumulated depreciation is £35,800, gives us a carrying amount of £39,200. And finally, we've got fixtures and fittings. The cost is £50,000. Depreciation is £12,400, gives us a carrying amount of £37,600. So the total cost is £325,000. The total accumulated depreciation is £103,200, and the total carrying amount is £221,800. Now, during the year ended the 30th of June 2024, so that's the year when this was the starting balances, the following transactions took place. So quite a few things happened. So number one, land and buildings were revalued at £290,000 on the 1st of July 2023. Plant and machinery was purchased at a cost of £35,000. Fixtures and fittings purchased on the 1st of July 2021 for £10,000 were sold during the year for £6,000. Fixtures and fittings were purchased at a cost of £18,000. JS plc's depreciation policy is as follows. Land and buildings are depreciated using the straight line method at 2% per annum. Plant and machinery is depreciated using the reducing balance method at 25% per annum. Fixtures and fittings are depreciated at 15% per annum at cost. And all non-current assets are depreciated for the whole year in the year of purchase, but are not depreciated during the year of disposal. Now, the directors of JH plc asked you to prepare a schedule of non-current assets at the 30th of June 2024, and we're told the total column is not required. So for the solution, I've put together the layout to save some time in the actual video. So the schedule of non-current assets consists of three sections, basically. It's the cost and revaluation, the depreciation section, and at the bottom, the carrying amount of net book value. Got one column for each non-current asset, land and buildings, plant machinery, and fixtures and fittings. Now, the cost of the 1st of July 2023, I've got £200,000 for land and buildings, £75,000 for plant machinery, and £50,000 for fixtures and fittings. Now, they came from the information of the question at the top. So, at the 30th of June 2023, which will be the end of last year's financial year and the start of this year's financial year on the 1st of July. I've got to cost £200,000 for land and buildings, £75,000 for plant machinery, and £50,000 for fixtures and fittings. So that's where those three figures have come from. Now, I've got various rows now underneath. I've got additions at cost, I've got less disposals, and I've got revaluation. Because I know from the question we bought some additions, we sold some, and we revalued one of them. And then I'm going to combine all this together. Eventually, we have the position at the end of June 2024. Now, depreciation, again, I've got at the start of the year, the 1st of July 2023, I've got for land and buildings £55,000, plant and machinery £35,800, and fixtures and fittings £12,400. Again, they came from the information in the question. So I'll go back to the information in the question, right at the top. Depreciation. So this is depreciation, we're told, at the 30th of June 2023. So that means it's also the starting depreciation on the next day, the 1st of July 2023. So again, land and buildings was £55,000, plant and machine was £35,800, and fixtures and fittings was £12,400. Let's go back to the depreciation section then. So again, we're now going to have the charge for the year. Now, we had some disposals, so we're going to eliminate some of the depreciation. We had a revaluation, and again, we're going to eliminate the previous depreciation, and then we'll end up with the balance at the 30th of June 2024. And finally, to work at the carrying amount of net book value, it'll be the total cost at the 30th of June 2024, take with the total depreciation at 30th of June 2024, to give the carrying amount or the net book value. Right, I've got some workings out to do here. I've got depreciation and disposal of fixtures and fittings, land and buildings depreciation charge, plant and machinery depreciation charge, and fixtures and fittings depreciation charge. Right, so we'll get to those three in a few moments. Well, there's actually four workings out there. We'll get to those in a few moments. So let's go back to the question now. So I've got here additions at costs. Let's see what we've got information in the question now and do bit by bit. I've got a cost in point 2, but first of all, it says in point 1, land and buildings were revalued at £280,000 on the 1st of July 2023. Right, if we go down to the cost section, the cost there is £200,000. Now it says it's been revalued to £280,000. So that means at the end of June 2024, we need to have £280,000 for the total of our land and buildings. So there's been an increase in the value of the property. The cost of £200,000 has been revalued up to £280,000. So the revalue is up by £80,000. So it's gone up by £80,000. So that's point 1 done for us now. So let's have a look at point 2. Plant machine was purchased at a cost of £35,000. So going into the plant machinery column, look for the additions column, which was here, and plant machinery was £35,000 addition. So they bought more plant machinery during the year for £35,000. So that was point number 2. Right, point 3. Fixtures and fittings purchased on the 1st of July 2021, so that was 2 and a bit years ago, for £10,000 were sold during the year for £6,000. Now, if they've been sold during the year, we don't have them included in our cost anymore. So go to the cost section for fixtures and fittings, and we're going to deduct £10,000. So that's disposals, take away £10,000. Now, if we want to tidy up our cost section now and revaluation section, land and buildings, we've got the total at the end of June 2024 is 280,000. Plant and machinery it was 75,000 at the start of the year, plus the 35,000 there. That's going to give us a total then at the 3rd of June 2024 of £110,000. And fixtures and fittings, we had to dispose of during the year. So that's going to give us a net amount at the end of the year of £40,000. Let's just check there was no additions for fixtures and fittings. Oh, yes, there was an addition of fixtures and fittings, so I need to put that in as well. So additions of fixtures and fittings was £18,000. So additions that cost are going to £18,000. So my cost for the fixtures and fittings at the end of the year is £58,000. Let's just check there was no other cost items. And that's covered everything until point number 4, so that's good. Now, depreciation policy is as follows. Land and buildings are depreciated using the straight line method at 2% per annum. So let me just check the straight line methods, put that in there. At 2% per annum, so it can be 2% at the cost or the revalued amount. Now, let's go down up. So let's just go straight back here for one moment. So I want to go to the depreciation section. If a non-current asset has been revalued upwards, whatever the depreciation was for that non-current asset at the beginning of the year is now excluded. So I've got less elimination on revaluation. I'm now going to take out the depreciation at the beginning of the year, which was £55,000. Because as the non-current asset has been revalued, that is no longer applicable. Now, back to some of the calculations underneath the workings. Also, depreciation and disposal of fixtures and fittings just got to be excluded as well. Now, the cost of the fixtures and fittings that were sold, we were told in the question that their cost was £10,000. So originally that cost us £10,000. Now, we need to know what the depreciation was when they were disposed of. So in the first year end, the 30th of June 2012, the following year ends after the 1st of July 2011, it's going to be £10,000, and the depreciation is 15%, and it says in the question it's 15% per annum at cost. So it's 15% of the cost. So it's £10,000 times 15% or 0.15, and that gives us £1,500. Now, as it's the depreciation is in the question, 15% per annum at cost, basically that's a straight line method. So each year it's going to be 15% of the cost. Again, the following year will also be £10,000 times 15%. And again, that will be the same figure of 1,500. So the total depreciation when the item was sold will then come to £3,000. As the item was sold, it should no longer be included in the depreciation. So we want to deduct £3,000. This is our fixtures and fittings, which is our final column, the third column. Less eliminated on disposal. So I'm going to exclude that £3,000 because we no longer have that non-current asset. So that's your point one there. Now, land and buildings depreciation charge now. We now use the new revalued amount. So we take the £280,000. So land and buildings then are going to have £280,000 and times whatever the percentage is in the information in the question. If you go back, I'm sure it's 2%. Here we go. Using a straight line method, 2% per annum. So it's going to be £280,000 times 2%. And £280,000 times 2% should give us £5,600. So that's our depreciation charge for land and buildings. So I'll go back to the land and buildings section now. The depreciation charge for the year is £5,600. Right, next we have plant and machinery. Now, we need the information on the depreciation charge, so we need to go back to the information in the question. So plant and machinery depreciation. Point 7, depreciated using the reduced imbalance method at 25% per annum. Now, just a little point here in number 9. It says all non-current assets are depreciated for the whole year in the year of purchase, but are not depreciated during the year of disposal. So we don't need to take into account any depreciation in the year of disposal. So plant machinery, reduced imbalance method. Now, reduced imbalance method is cost take away cumulative depreciation, and then times the percentage of 25%. So let's see what we've got here then. So plant machinery wants to know the cost first of all. So I'm going to go back to the schedule, and the cost there was £110,000. That's what I'll start off with, £110,000. Then I take away the accumulated depreciation, and the accumulated depreciation was £35,800. So £35,800. And then I times it by the percentage. So I just recheck the percentage in the question. The percentage was 25% per annum. So times 25%. Right, so we do that calculation now. 110,000 minus 35,800, then times 25% or 0.25. And put the equal sign at the beginning to give the answer. And we get £6,200. There's a little error there. Let me just check what it is. Oh, it should be £110,000. So there we go. So it's £18,550. So back to the question then, or the solution more rather. So depreciation plant machinery are £18,550. So plant machinery, depreciation in 12 years, £18,550. Now, the last one we got then is fixtures and fittings depreciation. So what's the method for fixtures and fittings? So go back to the question, look for the information. So fixtures and fittings are 0.8. They're depreciated at 15% per annum at cost. So we're looking for the cost at the end of the year, we're going to times by 15%. So the cost at the end of the year is £58,000. We're going to times it then by 15%. So it's 58,000 times 15%. So 58,000 and then times 15%. That's going to give us depreciation of £8,700. So put that back into the schedule then. So £8,700. So now I need to do the depreciation at the end of the year. So I just need to total up the columns. So for land and buildings, the first one, we're going to get a total there of £5,600. Plant and machinery, we've got a total of £54,350. And fixtures and fittings, we have a total of £18,100. So the final thing we've got to do is work out the carrying amount or the net book value. As I said before, that's the cost takeaway accumulated depreciation. So for our land and buildings column, it's going to be the £280,000 for the cost, take away the £5,600 for accumulated depreciation. So we've got a carrying amount or net book value of £274,400. Now the next one is check the heading, plant and machinery. It's going to be the cost of £110,000, take away accumulated depreciation of £54,350 to give us a carrying amount or net book value of £55,650. And finally, the last column is fixtures and fittings. It's the cost of £58,000. Take away the depreciation of £18,100, giving us a net book value, a carrying amount of £39,900. So that's the video on the non-current assets notes for limited companies. I hope you found it useful, and I hope to speak to you again on a future video. So take care then, and goodbye.